What's going on, guys? Hope you're having an absolutely fantastic day wherever you are, as always. So today we are doing Summary Sunday, and basically, today is the 5th of December, right? So every week, basically, I will have a video on Sunday called Summary Sunday, and basically what we do is in 10 or 15 minutes, we basically sum up the most important information in the past week and make it into one video, right? So this is easy, quick, and convenient for you to get your information. So if you do enjoy this structure and you want to see more, do smash up the like button, hit subscribe, and hit the bell button for notifications, right? So with that being said, let's look at what topics we have today. So the topics that we have today is Powell admits inflation is not transitory, some information on the new illness, China plans on banning IPOs according to Bloomberg, US jobs number missing heavily, right? And Didi delisting confirmed. So number one, we all love our Fed chairman, J.Powell. So this is what he came out and said on Tuesday. We tend to use the word transitory to mean that it won't leave a permanent mark in the form of higher inflation. So this is what he said in front of Congress, right? So yeah, he finally came out and said something that I think most people know already. Like this inflation is not just going to be 2 months, 3 months, or 5 months, or even 6 months. Maybe it'll go on for 2 years, right? So I covered this in a video the other day where we watched this video and also where I gave some of my thoughts why he's finally coming out and saying it, right? I'll leave that on the top right. But I didn't cover in that video what will happen to all the high growth tech stocks which we love because, you know, we're tech investors, right? So in my opinion, this tech stocks will get compressed, like their valuation will get compressed because they have been priced for 2024 rate hikes, right? And basically, the rate hikes are actually coming way sooner than expected in 2022, maybe even mid of 2022. So, of course, no financial advice here, right? So, next on the list is this new variant of this illness that shall not be mentioned on this channel, right? But basically, why I'm covering it again, you can see this article is from the 26th of November, is because this actually caused a lot of stock market volatility because Moderna CEO actually came out and said our vaccine may not be effective against this, right? So we need about 5 to 6 weeks to see whether the what are the real implications of this new variant. But Joe Biden has came out and said that we won't be locking down all this and all that. But of course, he wants to instill confidence and he has no actual information yet, right? What if this is like 10 times more contagious? Will they lock down? I bet they probably will. So next item, China is planning to ban companies from going public on foreign stock exchange market through VIE, according to people familiar with the matter, closing a loophole long used by the country's technology industry to raise capital from overseas investors. The ban intended to address concerns over data security. They always use that. So it's among the changes that may be included in the new draft of China's overseas listings. So what are my thoughts on this? And basically, I think everyone knows about this VIE structure, so I won't go into what a VIE structure is. And basically, I think that even if China does this, probably they are trying to move their capital markets back to Hong Kong, right? And back to maybe even mainland China, right? And I think that is not a concern for me because you may say New York Stock Exchange have higher liquidity and all that, but I'm buying in such a small quantity that I really won't affect a $300 billion company's value, right? I'm talking about Alibaba specifically. So if they move it back to Hong Kong Stock Exchange and all the US institutional investors will sell off their stocks because some of them have rules that they say they cannot own other country stocks or something like that. That would be actually good. Accumulating time to accumulate, right? Sorry, mince my words a bit there. But that would be a good time for us retail investors to accumulate basically. So I still believe in all these Chinese companies, but hopefully they won't invalidate the whole VIE structure. So that's a can of worms for another day, right? But basically that is the only risk I see in all these Chinese stocks. So next, job growth disappoints in November, right? So this is a huge miss, right? So I think, yeah, they expected 546,000 and they gained just 210,000, right? Less than 50%, right? So a lot of people will say, this is actually good because it will say to Jerome Powell, you can raise rates slower, right? Basically. And yeah, while that is true, a miss this big is really not good, right? Especially if the next inflation print comes out very high. And we can see that if that happens, we might be moving into a time of stagflation, right? So that is very scary as well. So if you don't know what stagflation is, basically slow growth and high inflation, right? It can happen. It doesn't normally happen, but it can happen due to very specific factors. So next, the decades-long trillion-dollar love affair between China and Wall Street is coming to an end, right? So this is an article from New York Times. Didi, a $39 billion company that is China's answer to Uber, said on Friday that it would delist its shares from the New York Stock Exchange. So only 6 months ago, they raised capital on the New York Stock Exchange, and now they are taking it off the New York Stock Exchange, right? But so this is why I'm not exactly so concerned about them invalidating the whole VIE structure, right? Because you can see that they are very against Didi listing on the New York Stock Exchange from the start, if you've been following this drama. And now all they have asked of Didi is just delist from the New York Stock Exchange, move to Hong Kong Stock Exchange, which further strengthens my view that they actually just want to move the capital markets back to Hong Kong, right? So they're wondering, why are all our companies, all our great Chinese companies, raising money in the US? Instead, they could raise in Hong Kong, which China also sees as part of mainland China, right? So you can debate whether that's correct or wrong, but I think in the CCP's view, Hong Kong and Taiwan is part of China. That is probably their point of view. So we can see what this did to Didi stock. It absolutely smashed Didi stock, right? And if you haven't smashed something else yet, this is free, right? Smash up the like button. It won't cost you 22%. Don't worry about that. So basically, Didi stock tanked. And if you still believe in this Didi company, I'm not specifically invested in this company, but if the same thing happened to Alibaba, it would be a great chance to accumulate more shares. So lastly, we're going to take a look at this. I didn't include in the list, but we're going to take a look at the past week, right? Because it's been an incredibly volatile week, right? So you can see 1 to 2% moves. This is a 5-day chart, right? So in one day, it moved about 1 to 2% every 1 or 2 days, right? And this doesn't happen very often. So anytime you have a 1 to 2% move on the Dow, it's a very rare day, right? And if we look at the VIX index, you can see this is a measure for volatility. In the past 1 month, it's up 86%. So yeah, it seems that it's a volatile time ahead, and there's a lot of news items to cover, right? So yeah, that's about all I wanted to share today. If you did enjoy, make sure to smash up the thumbs up button, hit subscribe, hit the bell button, and with that being said, have a fantastic day ahead, and peace out.